China, interestingly enough, rose 4 places in the ranking despite the slowdown.
Yep.
What was behind that?
Well, I think we need to remember that this is asking executives about which markets they think would be most attractive for investments in the next 3 years.
Yes.
Right. So I think the business fundamentals of China going forward remains strong. So it's still the second largest economy in the world. There are expectations that the states will continue to be supportive of the economy. So there's been loosening of basically capital controls for foreign investors. And over the next 3 years, I think there's expectations that we will see more measures that would allow investments in China to perhaps go back to its heyday. So I think this is a forward-looking measure rather than reflecting some of the current gloom and doom in the market that we're seeing now.
Understood. Soon Ghee, there's a belief that there's still a lot of room to grow in terms of the China Plus One strategy. Supply chain diversification, de-risking has really benefited Philippines, Malaysia, Vietnam, India most recently as well. Where do they stand in the ranking?
Well, I think it's interesting you mentioned that because while this FDI index covers the largest countries, and developed markets tend to dominate the ranking because they are large and they are well regulated, so it's stable and it's safe for foreign investors. We have a separate sub-index within the report that looks at emerging markets, and all the ASEAN countries that you mentioned, or most of them, actually appear in this top 25 emerging market index as places that are attractive for foreign investors. So I think this is reflective of the supply chain diversification, China Plus One. So we've heard stories about the investments coming into Vietnam, Malaysia, Thailand, the Philippines. To your point, I think the U.S. trade representatives visited the Philippines and Thailand fairly recently, talking about semiconductor investments. So I think we would see more of that going forward.
How is Japan looking in the ranking? Because from an index level, we've seen so much interest in Japanese equities, something of a renaissance in terms of corporate governance. The Bank of Japan is tiptoeing towards the exit as well. Are we seeing foreign capital and FDI intentions over the next 3 years reciprocate?
Well, I think interestingly enough, Japan actually dropped a bit in the rankings, right? And the survey was done in January, which, if you remember, the Japan economy was actually slipping into a recession. So I think what investors are saying, is that yes, there's a lot of money going into Japan right now in some of the sectors like real estate and maybe even the stock market.
Yes.
Over the next 3 years, I think there's expectation that, again, Japan will revert back to mean when it comes to FDI.